Welcome back to Innovators, and with me Professor Ari Ginsberg, Professor of Entrepreneurship and Management at NYU Stern School of Business. So welcome.
Thank you.
And I really wanted to talk to you about corporate incentives, and in particular, let's start with the Amazon situation in New York. And what was your take on how all of that went down?
Okay, regarding the Amazon situation, based on the facts that were released by state and city government in terms of cost-benefit numbers, the deal looked pretty good. It was basically a 9-to-1 return on investment, which is pretty good.
I mean, there's 25,000 jobs paying $150,000 a year.
Right.
And lots of costs that you can't really measure, like New York becoming a tech hub and attracting more talent. There was all this kind of extra stuff that came with it.
There's a growing suspicion of corporations being overly greedy, corporate welfare. This is benefiting just the rich, but those on the margin, the lower income class, they're not really getting that much out of it. That and I think the fact that a lot of the research by economists and even state agencies that have looked at the results of their investments suggest that the return on investment on average is either not positive or negative. Really? Yes. In terms of, for example, the expected employment rate didn't turn out the way it was
because I know up in Buffalo, was it Tesla with the solar factory? That didn't quite turn out as...
Yeah, so we have a number of instances where things didn't quite turn out, but anytime you invest, right, there are some risks. The real question is, how do you minimize the risks? So, for example, if you look at just the statistics, I'll give you two examples with respect to startups, right? The startup failure rate is very high. 8 out of 10 entrepreneurs don't make it to the second year or third year. The statistics vary, but they're pretty scary, right? So do we say, therefore, we're going to discourage, we're not going to teach entrepreneurship, we're going to discourage people from becoming entrepreneurs? No, it's important to say, wait a second, don't think this is easy. What we need to know from that research is, okay, the presumption of innocence of easy is over. Now let's figure out how to do this right. So yes, it's really caveat emptor. If you're a local government, state government going into these deals, you need to be very careful. You need to know more about what it is you can do to prevent things from going south or to prevent a large loss of money as opposed to sort of minimizing the risk of loss.
Well, one reason I know that opponents gave was that small businesses need help. But I was kind of like, well, isn't that, if Amazon would have come, and you've got 25,000 employees in Long Island City that are buying pizza and going to the pub for happy hour and working out at the gym. I mean, that's the ripple effect.
Right.
Really would have gone down to small business, I would think, theoretically, right?
I think there are two misunderstandings here. One of them is a suspicion of the trickle-down ripple effect. It's like, okay, we've heard that before, and it doesn't seem to trickle down. Like now you see, for example, with corporate tax breaks, a lot of people feel, well, what have the corporations done? Have they necessarily raised employee wages or more employees, or have they just bought back stock and done other things that go to executive compensation?
Yeah.
But also, I think more importantly, when it comes to what the corporation is doing with respect to small businesses, the idea is, okay, we're paying you for that. Okay, so we have this pot of money sitting here. We could give it to small business or we could give it to you.
Right.
But that's incorrect. There isn't a pot of money sitting there. These are tax breaks.
That's right.
That come with, so for example, if you bring in X amount of jobs which represents X amount of income, then the tax that will come out of there, we can then use for infrastructure, for small business. And then meanwhile, yeah, you get a break on that, but that's where the cost benefit is. You get the break, but you don't get that break until
you perform.
Until you perform.
Is this culture that we have of the government incentives like this a reflection of just taxes are too high? I mean, why would a government entity need to offer so much to attract a company if they could readjust that tax base to begin with, wouldn't that be a more favorable business environment?
Well, I think in general, this administration has created a more, more favorable business
Trump
environment.
administration?
The Trump
Okay,
administration, yes. What we're really talking about is taxes on city taxes or state level taxes. And it may be, in some instances, I think they should reconsider the taxes, but you got to be very careful with that because the corporate world brings in, for example, in New York, brings in a lot of taxes. And I think what's more important to do is do your research. Is this a corporation that's going to benefit an important industry here?
Thank you so much, Professor Ginsberg, for coming.
My
Very
pleasure.
interesting.
Thank you for inviting me.
Yes, and I'm sure the debate isn't over, so
Oh, no.
we'll be hearing about this.
Yeah.
And thank you as well. We'll be right back.